Welcome to Tradespoon. My name is Lakar Pal. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, trading psychology, and any questions you might have about Tradespoon or Yellow Tunnel subscriptions. Before we begin, please let me know if you guys can hear me and see my screen, and we'll shortly after. Good morning, Phil. Good morning. Joseph, good morning. All right. Looks like everybody can see my screen. All right. Welcome to Yellow Tunnel and Tradespoon. Today we're going to have a weekly strategy roundtable discussion of where we talk about current market conditions and any questions you might have about your Yellow Tunnel or Tradespoon subscriptions. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. Since I left Options Express, I work as a consultant and investor in several financial technology firms here in Chicago. I want to take this opportunity to say thank you to all the Yellow Tunnel and Tradespoon subscribers. Because of you, I'm able to do what I enjoy professionally. I've been trading and managing my account for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and statistics. Disclosures: trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I encourage you to read characteristics and risk of standardized options at optionsclearing.com if you haven't done that before. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, before we talk about trading system, let's talk about current market conditions. I'm sure everybody want to see what to expect next. Currently, market retested this 320 level, right? That's kind of been 320, 323 is the main support, actually 323. If we look at the one-day chart, this was the breakout. We traded at least 4 sessions above that until yesterday. And currently we're trading pretty much the same level. So we broke through the 323 level. We're now trading at 320. I think that's right now is the line in the sand. Depending where we're going to close today and next week. If the market closes above 323 level in the next few sessions, I would say that this breakout is confirmed and the market will be on its way to retest 340 level. If the market, I think it's too early to tell what will happen, but if the market closes, let's say today or next week below the support level at 320, then I think market will be on its way to retest 312 level. I still think that in both cases scenario, the price pattern is higher highs and higher lows. So I don't think market will retest to 96 at this level. I think worst case scenario 300 or more realistically 50-day moving average. If we do close below that level, you do have a lot of the gold cross and a lot of asset classes, and then you have 200-day moving average and 50-day moving average. So I don't think market will break through this support level at 50-day moving average, but again, it's too early to tell. I think right now we just need to see if there's a confirmation. So if market is able to stay above this level, then we will retest 340. If the market breaks down, then I think we'll just be trading in this range between 330 and 300, 200-day moving average for the next couple months. Technology, we talked about this for the past couple months. Based, market usually doesn't move in a straight line, so it looks like this trend, this uptrend is broken. Let's see, at least as of right now. Right, or we're at least retesting this trend line. Support is currently this trade line. We tested it once, we kind of rebound this again. 250 I think is a support. Next level support is 240. So again, 50-day moving average. I think the way I'm structuring that's my portfolio, I think this is just a healthy correction, right? Because the market technology sector has been outperformed, I mean, overbought. So I think 50-day moving average will hold, right? There's a lot of support. This is the breakout, the February high, around 240 level. So as long as the market trades above 240 level, I think that would be probably the worst case scenario, where we kind of briefly break through the 50-day moving average and retest 240. So I would keep an eye on technology and semiconductors, right? Intel had a bad earnings. Not bad earnings. I think it's just, I don't think the earnings were that bad. I think it's just market overreacted because of this, high expectations. Same thing with Microsoft. I think there's nothing fundamentally wrong with the earnings. I think they had a beat on all the metrics. Companies growing, but it's retesting 50-day moving average and actually bouncing back. And same thing with Tesla. Positive earnings, better than expected, 4 consecutive earnings, but the market is still down. So this is more of a not reaction, kind of reaction to the news, but irrelevant what the news are, market just short-term trying to give up some of its gains. The positive news is the dollar, right? This is not a sell-off across all asset classes. Dollar continues to pull back, which is a positive momentum for the value stocks, all the value stocks in general. So the value stocks continue to make a pattern of higher highs, higher lows, and continues to grow. So let's look at, see what today. So junk bonds are up on a down day. That's positive news, actually retesting June high, right? So there's no panic in the junk bonds, which is very important. Metals and miners continues to retest June highs. Home builders broke through the June highs, actually at 52-week high. This is part of the, again, that weak US dollar reflationary trade theme. Germany continues to outperform US market, actually at February high. So Germany is outperforming the market, Europe outperforming the US market, China outperforming the US market, broke through the February high, now kind of on the tension between US and China, pull back. VIX is no panic, right? Right now, there's no evidence of panic in the market. Industrials are actually positive today. We have energy positive today on a down day. So there's definitely support from, this is not a sell-off across all asset classes. Consumer staple, overhead resist, which is a positive news, and utilities are trying to reclaim 200-day average. Another bear case, technologies, the bear, bear treasury. Treasuries are continuing to go on higher, lower yield, which is negative for the market. It looks like it's trying to break through the May high and on its way to retest April highs. I don't think treasuries will break through this level. I don't think we're going to reach the extreme levels we had in March. And at some point in the next week or two, the treasuries will pull back. So kind of a mixed signals, right? Which is good. You don't want to have fell off across all asset classes. You want to have kind of a mixed picture. That means that this is just more of a technical trading. Probably exaggerated by the fact that we're in the middle of July and low volume environment. So how do you trade in current market conditions? Very important to have a right. So it's Yellow Tunnel and Tradespoon. For both subscribers, it's the same system. During live trading room, you can actually see that always before the market opens, review trading plan. Right, I think, and to have three, it's important to go over before the market opens. Good morning, Joseph. Good morning, Faye, Frank, Doug, Leon, Ruben, Lou, welcome. Trader, welcome if this is your first event. There, good morning. Buy the rumors, sell the news. Okay. I assume it's a reference to earnings from the Microsoft. So yeah, I mean, the earnings in technology name, Tesla, Microsoft, IBM, I think had a part of earnings. So it's just kind of, you just need an event. It doesn't matter what the news are, but it just needed an event as an excuse to sell off, which is as long as there's no fundamental issues in the underlying assets, and technology, I think, is going to continue to be the leader of the market. So thank you for your comments. And again, I encourage you guys to enter questions you might have about your Tradespoon and Yellow Tunnel subscriptions. My goal is to make sure that by the end of the session, I do get a chance to answer any questions you might have, because I know there's always questions. There's always things need to be clarified. So in a live trading room environment, every day we have a morning and close session. I always go over three things. First thing is the trading plan. In the trading plan, the 4 pillars of successful trading, I think, based on my opinion, are these 4 things. First is portfolio allocation. You always want to have cash in account. The rule usually never the margin, and when the market pulls back, if you do get on a margin call because you don't have enough cash, where you force for liquidating your positions, and usually it happens on the bottom of the market, right? So avoid that situation and always keep an eye on your cash. How do you know how do you keep an eye on the cash? That's the second pillar, portfolio drawdown. So at any given point before I enter the position, I ask myself, how many positions do I have? And what is my stop levels for each position? So for long-term trading, right, during day trading, I mean, yesterday was a reversal, technology was up, in the middle of the day we had a reversal, market technology pulled back. That happens rarely, right? Usually there's some news outside, pre-market or after market or before the market, which pulls the market down. So before you enter the trade, before the market opens, you usually look at how many positions do you have, and you look at your stop levels. So for long position that I carry overnight, I look how many positions do I have, and what is maximum loss. So my rule is 5% allocation maximum. So I allocate 5% to either it's a stock position or an option position. 5% allocation, and for options, it's 50% stop loss. So if I buy an option for $1, then the stop loss is 50 cents. If I buy an option for $10, it's a $5 stop loss. So maximum loss is 2.5%. So if I have 10 option positions, or if sometimes I have a mixture of option and stock positions, stock is less. Usually I don't wait for the 50% stop loss. It could be, depending on the market condition, could be 10 to 20% loss. But let's look at the worst case scenario where it's all option positions. Then if you have 10 positions, 2.5% loss, that's 25% portfolio drawdown. So that's pretty aggressive if you're new to trading, or if you've been trading for a long time, but you have lower risk tolerance, right? Usually it's, if you have a larger position, or you just, don't like to take a lot of risk, then usually it's 12.5%, right? Somewhere between 10 and 15% of your portfolio drawdown. So that means that instead of 10 option position, maybe you have a mixture, 5 stock, 5 option positions, right? Maybe you do cover calls and you do option positions, or some of the positions, instead of being long the market, you can be short the market. So I have a Spider's put spread. or credit call spread, right? So if you have Spider's credit call spread or debit put spread, this is inversely correlated. So buy Spider's puts, you can buy gold, you can buy treasury, right? We've seen treasuries being a hedge for the market correction. So you buying asset classes that are inversely correlated to the stock market, or you hedge your existing stock or option positions with bearish calls. So you can cover call, right? Market neutral strategy. You can reduce your exposure to the market by trading cover calls or a condor, call condor. If you have a debit spread, you can sell call spread against it, or you do a butterflies. But portfolio drawdown is very important when you have institutional portfolio managers that go through these exercises, on weekly or monthly basis, where they go through what if scenario, right? They basically say, what if the market continues to sell off, and it's realistically that the market can pull back 10 to 15%. The worst case scenario, I think it's going to be less, 5 to 8, but let's make an assumption that it's 15% portfolio drawdown. So what will your portfolio look like if the market actually retests 296 level, which is at current level 10% correction, right? If we go from 326 to 296, that's 10% correction. What will your portfolio look like? So it's important to go through that exercise, and that's the second pillar of successful trading. We always go through that in a live trading room environment. The third one is probability of success versus return on capital. I believe trading is based on the opinion you have on the market, on certain stocks, certain asset classes. And then every time you have an opinion based on your research that you do or the models that you're using, you have certain probability of success. So at Tradespoon, we utilize 3 different models. It's actually more models, but 3 models that make prediction for 3 different time intervals. So for day trading, if it's 1 or 2 days, that's active trader or aggressive power trader on yellow tunnel, or weekly trader. There's 2 different models on both on Tradespoon and yellow tunnel sides, which is 1 to 2 weeks. And then there's a monthly trader on the Tradespoon side, which is long-term trading, long-term investment, 1 to 2 months time horizon. And across all 3 different models, we're able to achieve 75% accuracy. So across all 3 different models, 75% of the time, when the signal is generated, basically based on the time interval that it's trying to make a prediction, it's accurate 75% of the time. So the higher the probability of success, the smaller the return on capital, and vice versa. So if it's a high 75% probability of success across 3 different models, then the return on capital for short-term trading, if I hold a position for a couple of days or less than a day, I look for anywhere from 0.5% to 1% gain. If I carry position for over a week, then I look for, usually I do this with options trade, I look for 20 to 40% target gain. So 50% stop loss, 20 to 40% target gain. On stock positions, usually it's anywhere from 5 to 50%. If you look at the Robo Investor or you look at the live trading portfolio, on stock positions, it averages anywhere between 5 to 10% target gain. So probability of success versus return on capital, that's the third pillar of successful trading. And the final pillar is position management, right? And to making sure you're following these first 3 steps. So if the probability of success is 75%, then your job becomes to make sure that the 25% of the time where the trade goes against you is less than 75% of the time where trades are successful. So if you let's say if I deviate from my trading plan and instead of a 50% stop loss on options, I wait till it's 100%, expires worthless, then one trade is 100% loss. If I have 3 trades where average is 30% gain, then overall my portfolio will still be down by 10%. So that is a reason why very often when the option drops to 50%, I exit the position, because I know that if I wait and if I'm hoping that the market will reverse, sometimes it does, sometimes it doesn't. But if it doesn't, then it kind of negates the previous 3 trades that I have done. And that gives me motivation to close my position and follow my trading plan. So trading plan is very important. Also, in a live trading room environment, we go through trading psychology. So for Yellow Tunnel subscribers, I encourage you, if you don't have Yellow Tunnel account, to open Yellow Tunnel account. The difference between Yellow Tunnel and Tradespoon is that I built the Yellow Tunnel about a year ago with the idea that, well, first of all, I knew Dr. Maneker for many years, and the idea that I think to be a long-term trader, successful trader, where you have a long-term confidence, you need to master trading psychology. A lot of people think, well, trading, not a lot, but when you trade in the beginning, when you trade, you basically don't think that psychology and trading psychology is important. At least in my case, after a long, after you trade for a while, you realize that the way you handle in your own emotions and feeling ultimately will influence your overall portfolio performance, especially when volatility is high, right? When VIX is low, maybe trading psychology is not important, right? And you're fine. But when VIX jumps to 80 or when VIX jumps to 50 or 40, trading psychology is probably more important than reading charts or looking at the fundamental analysis. So at Yellow Tunnel, I encourage you to review the free, we have educational content. So blog is free. We have trading psychology, right? We just posted actually a new article by Dr. Maneker, Process versus Outcomes. I encourage you to read this. We also have a series of weekly blog where we talked about different ETFs and different asset classes and which stocks in those asset classes will outperform the market. Covered Russell 2000 last week. And then trading discipline videos from myself and Dr. Maneker. So understanding your inner market and most surprising aspects of successful trading, what a real job of a trader entails. So I encourage you to review this periodically. These videos, recorded webinars or small videos, and participate in upcoming webinars. In the live trading room environment, we always go through labeling exercises. I think they're important to identify how self-aware you are and whether you know whether did you get enough sleep. So we're going through this one-word labeling exercise. Are you tired? Are you happy? Are you excited? And this is something I encourage you to write down in your trading journal. So the first step is trading plan. The second step in a live trading room environment before market opens, we always go through the trading journal. Why is trading journal important? Just like when trading is just like running your business. When you trade on your own or you trade with a group of people, it's equivalent of running the business, and it should be treated as such. In any business, usually you have a business plan, which identifies your goals, your objectives. But then you need the board of directors, you need financial controllers to make sure that what you're planning to do and what you're actually doing are intact, right? There's no gap between what you're planning to do and what you're actually doing. So that's your trading journal. Trading journal, if you're trading on your own, this is your opportunity to review whether you're following your trading plan and how closely you're following your trading plan. I encourage you, just like board of directors gives you a grade, or financial controllers give you a report of how well you're doing, also grade yourself. So if you're following your trading plan and you have either positive or negative outcome, I usually give myself A or B. And if I deviate on the first four, on my trading plan, those first rules that I just identified, then I would give myself a C or D, right, based on positive or negative outcome. And to build long-term confidence in yourself as a trader, it requires, I think, the goal is to be, you can never be 100%, but 90%, 95% of the time, you want to have A's or B's when you grade your trading decision and outcomes of your trades. So in the trading journal, I would write down how much cash you have, what is your portfolio drawdown. I would identify what your target gain, stop loss, what signal are you using, what probability of success is, identify key support resistance levels, but also write down that one word that describes how you feel that day. So that's the second thing that we do in live trading room. Before it opens, go over the trading. I have a journal that I record, and I encourage you to do the same thing. And the third thing, we go through these forward rehearsal exercise. Before market opens, close your eyes and just say, if you're day trading, if the market reaches 320, what will I do? If the market reaches 327, what will I do? If you're longer term trading, what will I do if the market reaches spiders 310 level? Maybe go long, or if it goes to 330, maybe go short. But you go through these future rehearsal exercises and kind of make a decision at which level you're either going to enter or with which levels you're going to exit the position. But I think it's extremely important. So how do you trade, in these conditions? Again, we have, as I mentioned, 3 different models that we're trading in a live trading room environment. One is active trader, one is the weekly trader, and one is the monthly trader. Active trader, again, optimized to make predictions for 1 or 2 days. Weekly trader optimized to make predictions for 1 or 2 months. And monthly trader optimized to make predictions for 1 to 2 months. I mentioned live trading room environment. Again, you can go into have different live portfolios. We have Elite Trading Circle that consists of morning bell and closing bell. So let's go over that. So if you have an Elite subscription at Tradespoon, you have access to morning bell and closing bell. Scott and I are managing these positions, managing this live trading room environment where you can ask live questions. You can see us trading live. You also have a trader log where you have access to all of my trades. So you can go in the past 7 days and just basically see, or whatever the time interval, see all of the different trades that I have done. PayPal, Intel, Texas Instruments. And you will get SMS message every time I trade in all the 3 different models. Some people trade only weekly traders, some people trade only day trading, some people trade all 3 models. So you will see trades based on all 3 different models. So that's the Elite subscription, and also give you access to the weekly trader model. If you don't have time to trade multiple times a day, or you don't need to see my portfolio, then we also have real time. We have, throughout the day, we also have a premium portfolio and Robo Investor portfolio. The difference between premium portfolio and Robo Investor portfolio is that they're using the similar models, right? They're using the same models to make long-term predictions, but it's based on in the premium model, the premium portfolio difference is that I personally trade option spreads. So in this example, a signal was identified on July 20th, and basically says, well, if you're a stock trader, you can buy it at 98.16, right? And right now, what is it? It's $99, right? So it's up, 1%. So you can buy stock, but I personally trade option spreads, right? So you can actually see all of the working orders, all of the filled orders, and at what price did I enter or exit position. You get an instructional video explaining current market conditions, and you get email and SMS message every time I would adjust this position. And we have 1 trade a week, so 4 trades a month. So you get four positions a month. This is for somebody who doesn't trade multiple times throughout the day and basically has 4 or 5 positions at any given time. And maybe you have a full-time job, or just you don't look for more than 4 or 5 new positions a month. So that's the premium portfolio. Advantage of premium portfolio, again, you have all three different choices based on your comfort level. You get an instructional video explaining why I got into this trade and what my view on the market is. And you also have different tools that can help you look at the trends, probability calculator, and what our view on the stock is. So if you hover over this buy-sell rating is 8, and is, you can see the current trend analysis. The next live portfolio is Robo Investor. So similar to premium portfolio, you have a newsletter that comes out twice a month with two different trade recommendations. Unlike premium portfolio, this is where I trade option spreads. So at any given time, I have up to 20 positions. I allocate 5% or less into each position, right? And I have up to 20 positions. So the idea is that usually I hold it, unlike premium portfolio where I have to be correct on the timing because options have two important characteristics, trend, the magnitude of the move, but also the timing. In stock portfolio, for stock trader, timing is less important. As long as you're correct on the overall trend, then you have time. So that's the biggest difference between premium portfolio and Robo Investor portfolio. You have access to portfolio orders. You get SMS message every time I get in and out of the trade. You get the newsletter every 2 weeks that explains you, why we're getting into certain stocks or certain sectors. And that's a Robo Investor portfolio. Let me know if you have any questions on the. Sorry about the sound. I think it's back. Let me know if you guys have any questions. I'll be happy to go over them. All right, so these are the live portfolios, right? If you're a premium subscriber, you have access to premium portfolio and Robo Investor portfolio. They're similar. If you're elite subscriber, you have access to all three portfolios. If you don't need access to live portfolios, which is premium portfolio and elite, we do have tools membership. Tools membership gives you access to all of our tools. We have Stock Forecast Toolbox. This is the main tool I'm using to analyze the market. Today the models predicted 322 to be support, 327 overhead resistance. The trend is positive. Currently trading at 320, 321 level, showing you that the market is oversold and gives you a letter grade B. So right now, 70% of the time, when the stock does break below the support, that means 71% of the time it will close above that level. And this is a critical support level today. So we'll see if the market is able to hold on to this critical 322 support level. That's Stock Forecast Toolbox, also seasonal chart. Gives you predictions for all the optionable stocks. If 4 of 4 predictions are higher, then you can see the accuracy. 77% of the time, the stock market continues to go higher. So still strong positive momentum behind the bulls for the next 50 days. So can help you make decision on ETFs or stocks. I quickly mention this, you can buy active trader subscription, monthly trader, weekly trader, active trader every day. You get 3 bullish, 3 bearish stocks. Today, Ford was one of the active trader stocks. Again, the idea is to buy either at $6.73 or $6.98. Right? You look at the pre-market futures. If the pre-market futures are down 50%, more than 0.5%, then I usually use strategy A, which is based on predicted low, $6.73. Right. So if you go to Tradespoon, you type in Ford. This is where the $6.73 came from. This is a predicted low price. So that's the suggested entry price. If market is not down, pre-market futures are not down, then idea is to buy at the previous close price at $6.98, and you can look at the forward today. Let's see how well the model did. So the stock opened in gap down at 690, so reached 690 level. So if you waited for the predicted low, which is 673, it never reached that level today, right? So if you're waiting for 673, you would not be in this position. If you did it based on the predicted previous close, 698, then you would get filled at the open price. I'm not sure what, somewhere around 696, 694, and it was up about 1% and now still down, so it's trading in the range. But it tells you that at 690, the stock is oversold, potentially reaching 673. So if you're patient, then potentially you can wait for the 673 level. So that's the most common question. What if it doesn't reach this level? If you wait for 673, the outcome will be that you will have less trades, but probably the percentage of winning trades will be higher. If you do strategy B, then you will have a lot more trades, but your winning trade percentage of winning trades will be less. And you can do the same thing with the options, right? If you want to trade options, instead of buying forward at 692, right? You can buy option that expires today for 50 cents, right? 650 plus 50, that's that 692 prediction. We're rounding up. And then same thing for the 72 cents. Instead of buying the stock at 672, you can buy 6 call for 25 cents. So this is the aggressive trader. In live trading room environment, I usually trade one of the aggressive power trader. So it's a combination of active trader model, but also a different model that gives you more symbols, right? So if you're a more aggressive trader and you need more choices, then it gives you different sectors. So you can see AutoZone and companies that deal with transportation, right? We've seen transportation, not transportation, but car makers and car parts sector has been in strong uptrend. You see CHD, consumer staples, or Deere, the industrials. So you can see which sectors are leading the market and gives you more than the choices. More, and actually right now model shows a lot of symbols outside of the growth sector, but a lot of the value stocks are continue to be in the uptrend. So that's aggressive power trader and active trader for short-term traders. Same thing, we have a weekly trader. Gives you 3 bullish and 3 bearish ideas every week, right? You can go and, this week was NVIDIA. Same thing, idea was either to buy at 408 or wait for the pullback and buy at 399. Right? If you waited for the pullback, then, it will be up by $10 by now. If you entered at 408, it would have been even. So again, gives you entry and exit prices, give you 3 different choices. Similar fashion on yellow tunnel, if you need more than 3 choices for weekly power trader, then you have a bigger list, basically, of all the stocks that the model has identified, as opposed to just 3. Michael recommended stop loss for stock trades. Again, depends on the time interval. For day trading, it's a 1% stop loss. So if you're doing day trading, it's a 1% stop loss. If you're doing weekly trader, it's 2 to 5% stop loss. If it's a long-term monthly trader model, then usually it's anywhere from 10 to 20% stop loss for stock trades. So Ricardo, in the weekly trader, 3 bullish. So on Tradespoon, it's 3. On yellow tunnel, it's as many as the model has, right? They're all, we have a team that we go over these picks to make sure that they're consistent with the current trends. But if they're consistent with the trends, then On yellow tunnel, you get more choices, and weekly in Tradespoon you get 3 choices. Thank you for the question. TJ, yes, active trading is for day traders. Day traders, or if you short-term traders, if you really, sometimes I would close the position the same day. Sometimes, like an example of PayPal, I carry a position overnight. If I want to own a PayPal and it's identified by the active trader model, I know that active trader model is a momentum model. So if it sees stocks in a upward momentum, so I would carry position overnight. TJ, seasonality you have no. You can use the seasonality tool if you're an elite subscriber, but also if you're a tool subscriber. If you are a tool subscriber, then you do have access to seasonal chart. Or if you're a Robo Investor subscriber, you have access to seasonal chart. Right. So seasonal chart is included in multiple memberships. Carlucci, Yellow Tunnel is not a brokerage. So Yellow Tunnel is a sister company of Tradespoon. I'm a founder of both. Tradespoon is all about models and modeling, right? Statistical analysis and live trading, right? So concentration on statistical analysis and live trading. Yellow Tunnel, still models. We do offer models, but concentration is on trading psychology. And we kind of separate the 2 companies just because some people, think the trading psychology is important. Some people don't think trading psychology is important. So, but that's the beginning. Both companies have models, right, and have blog that talks about different ETFs. So I encourage you to open up. This account is free. These services are paid services. Weekly Trade and Aggressive Power Trader. These are the paid services, but blog, webinars, recordings, live webinars are free. Swing trader, you can use weekly models or monthly models. Ricardo, if you only do stocks and not day trading, it depends, Robo Investor is all stocks. So Robo Investor portfolio is the first choice. If you do want to see what I trade, it's Elite Trading Circle, because I do have stock positions. It's a mixture of stock and option positions. So option position you can ignore if you don't trade options, or at least consider them as a hedge. But if you just want stock trades, then Elite Trading Circle, part of the live trading room environment, some of the positions I do have stock positions, either stock or synthetic stock. Often I would short a put and buy a call. But Elite Trading Circle, Robo Investor is 20 stocks, portfolio that I manage 20 stocks. Elite Trading Circle, you have additional stocks. Weekly trader, these are stock signals, but only for a week. So it depends what your time intervals. Robo Investor is more of a long-term trading. If you're holding stocks for months, for a few months, then I would go with Robo Investor. If you're using stocks for a week, then weekly trader. Depends on what your time horizon and time interval is. Any other questions? All right, it's 10:18, 10:20. If you don't have any other questions, I think I covered everything I wanted to cover today. Unless you guys have any other questions, have a great weekend. Let's keep an eye. Today closures, I think, is extremely important. I would look at the spiders. I would keep an eye on QQQ and see where we close today, right? We attempted to close the gap on QQQ and spiders, which is positive, but I would look at the main support levels, right? We're retesting this initial sell-off. Let's see. right? This is important support level going back to June, right, where the trend is. So it's important to see where the market QQQ closes. If it closed below this level, this is below this level, I think QQQ will continue to drop and will retest 50-day moving average, which is at this point 244. So if we have a weak closing and the market sells off either today or Monday, and this support level doesn't hold, which is what we've been retesting, 250, next level of support 240. I personally don't think we're going to break 240 level. So I think 240 will 50-day moving average will hold, and that's the worst case scenario in technology. And same thing with spiders. We'll see where the market closes. If it breaks through the support level at 318, then the next level of support would be 50-day moving average, which is around 309, 310 level. So that would be the support, which was the low from 2 weeks ago. To get in the speed they do it, not sure if they. All right, thank you, Terry. All right, Al, Anatoly, Andrei, and BK, Karluchev, Claude, Craig, Dennis, Donald, Thad, Ferry, Faye, Frank, Harry, James, Jamie, Jim, John, Joseph, Koshik, Kevin, Koo, Leon, Lynn, Low, Lou, Marvin, Michael, Patrick, Paul, Phil, Randall, Ricardo, Ruben, Sean, Shazad, Shaniqua, Sophie, TJ, Tom, and Wes, and lots of traders. So if you appear as a trader, do me a favor, just go into a profile and enter your name, so it appears when you are joining these live events. Have a great weekend and enjoy time with your family. US dollar, Sophia, if you say in US dollar, USDXY, US dollar, I think the trend is to continue go down. If this is not just a brief short-term correction, and actually we have more potentially, dollar can rebound back. It is extremely oversold at this level, but I think the pattern is continue to go down, and this is one of the main reasons why I think that Europe and US market is going to continue to go higher. Weak dollar is good for commodities. It's good for countries that are based, derive their revenue from commodities. And so emerging market, Europe, Australia, Canada, industrials, energy sector will all be a beneficiary of this sell-off, in US dollar. So this is the main thesis, the main reason why I think market is going to continue going higher, and this is just a short-term correction. Fed, Faust, thank you. Kaushik, Michael, Pei, Karluchev. Apple is the same thing. I mean, there's earnings, right? So it's hard to predict the especially with Goldman, but earnings next week will determine that. I'm usually not good, and I don't think anybody can predict the earnings. Same thing with Microsoft. It had great earnings, but it sold off, or Tesla. So I think it's oversold, but same, following the technology. I think the 50-day moving average will hold. The worst case scenario is 330, unless they have something like Intel. Intel, I also didn't think that it will. Intel never sold off, 17%, right? It was as low as 49. So Intel never sold off 17%. That doesn't mean it something like that cannot happen to Apple. If they come out and people don't buy phones or they don't buy as many laptops or anything negative, next week stock will sell off. So this is probably an important week, right? We're going to have Apple announcing earnings next week. We're going to have Amazon announcing earnings next week. We're going to have Facebook announcing next week, and that will determine, I think next week is going to be important, how far this correction is going to take us. I personally think that technology will hold the 50-day moving average, and this trend will be intact. Yes, TJ, I do use iron condors for earnings during live trading room. That's correct. I think Sophie market dropped yesterday for the reason, it dropped, here and here. Technology is just overbought and bulls are just taking profit. That's the reason. Usually market reverts to its mean. But so far for the past, since March, it's never been more than just, a couple, like a week or so, a couple days of down market. We haven't had 3 down days since March, right? Since the February sell-off. So usually it's 2-3 days correction, then rebounds, but the pattern is higher lows, higher highs. And I think that pattern will stay. All right, thank you very much and have a great day. And we can enjoy your time with your friends and family. Thank you, guys.